Hello, today I want to talk about striving in business. This is level 4 in my 5 states of business ownership. And this is where things are really starting to happen for you. This is where you can start to feel like, I got this. This business thing is working for me and we're on the way. I've gone past all those days of stressing and struggling and surviving, and now business is starting to turn itself around and feel like I'm doing the right thing, and this was the right decision for me to go out in business on my own. So for me, the definition of striving in business is having at least a month's worth of, or around a month's worth of expenses in the bank account at all times. You've now got to the point where you've got money in the bank, you don't have to worry about paying the bills, and now is the time that you can pay the bills when they come in because you know you've always got that buffer in the bank account. So now is the time. I talked in some of the earlier states when we were struggling and stressing about paying bills when they come in is not ideal at that time because you just don't have the funds. Now you've got the money and it's okay to pay the bills when they come in if you choose to. Ideally you don't need to, but you can. What you've probably also got now is you've got a good customer or client base that are regularly paying you on time. Part of this is now to look at that again, delve into your invoices, double check that you don't have invoices that are outstanding for any great period of time, and if they are, now's the time to really start looking at your debt collection process. It's not to say you shouldn't be looking at it in previous stages, absolutely, but now's the time to really tighten that up. One of the things as small business owners that we don't do is a new customer comes to us and we say, yes, we'll do some work for you, and yes, we'll do the work or we'll sell you the product, and yes, we'll give you an invoice and you can pay us later. That's all good. We don't check. We don't do any credit checks on them. We don't find out about how, whether they pay their bills on time, what their credit rating is. We don't check anything. You know what's the silly thing about that? When you go and you ask your suppliers for credit, chances are they're giving you a whole big form to fill in that goes through a lot of information about who you are, what you are, how much money you want to have on your account, may even ask you some financial questions. They may they may go off and get a credit reference check done on you. They may in fact ask for you to sign a personal guarantee or a director's guarantee for the debt. Big companies do it. Why don't small business do it? Really? We're leaving ourselves wide open in that. So have a look at tightening the control over who you're selling to and how you're dealing with that. Now, if you're getting credit card payment up front, your payment at the time up front, this is irrelevant for you. But if you're doing something where someone asks you, can you give us an invoice and we'll pay you on invoice, you need to check out who they are before you do that. That's the first thing to think about. Second thing, of course, is to keep honing in on your profitability. Delve into those expenses and make sure that you haven't got anything in there that's not necessary. Have you got some advertising perhaps that you have, but it's not really working for you? Why are you still paying for it? I remember, and it was some time ago now, obviously, when you hear what I'm about to say, but I had a client who was paying like $10,000-15,000, I think it was, a year for a Yellow Pages ad. And internet was on, everybody was Googling things, no one was looking at the Yellow Pages, and yet they were still paying these Yellow Pages ads. And what was really interesting was that this particular client, every time a new client came to them, they asked them how they heard about it. And what I said to them is, okay, well, can you tell me, how many people have you got from the Yellow Pages ad? And they went back through and realised that over time, They used to get a lot. All their work came out of the Yellow Pages. Fine. But then as the way we search things changed, and we no longer do the fingers walking through the Yellow Pages trick, we now do the fingertips on the Google search, it wasn't doing them any good. They immediately stopped it. Now, that's not a great example for today's world, because hopefully you're not paying for a Yellow Pages ad, because I pretty much guarantee no one's looking at it. But if they are, and you're tracking it and you're getting return from it, absolutely. But the key with a lot of the advertising is you've got to ask new people that come to you, how did they hear about you? Where did they find out about you? Because then you know where your ad spend, your marketing money is working for you and what's not. So you need to be keeping track of those metrics. So that's one way to look at it. The other things, there's things that sneak in there. There, particularly in today's online world of software as a service, where you're paying subscriptions for things because it seemed like a good idea at the time, and then perhaps you found you're either not using it, or you found an alternative solution, so you don't need both anymore, making sure you're cancelling out of things that you're not using. That's another place I often find that money is just disappearing out that's not necessary. Had another situation at one point where people were paying for fresh flowers on the reception desk every week. And whilst the flowers were beautiful, they were lovely, did they really need fresh flowers? I mean, if you have fresh flowers, you do need them every week, because they're not going to last unless they are the everlasting Australian bush type flower arrangement. But the fresh flowers, a week's all you're going to get from them. But what about an alternative to that? Could you find something else that doesn't cost you fresh flowers every week? Those things. It may be little nuances, little tweaks, little bits, but $50 here, $50 there, particularly if they're monthly fees, they add up, and then suddenly you can find that maybe you can find a few $1,000s. In one particular case, we found $2,000 a month in stuff that there was $2,000 on some advertising that wasn't working, that was just in the first instance, and I think ultimately we found about $5,000 a month that didn't need to be spent. That's a bit of an extreme case, but we certainly can find a few $100s here and there, and a few $100, for $500 a month, that's $6,000 a year. That's $6,000 a year that you could perhaps use to do something that's better for your business, or perhaps even take it as a bonus so you can take the family on holidays, or have a better holiday, or a bigger Christmas, or whatever it is that you want to do. But the good thing at this point is that your business you're striving, you're now getting runs on the board, you've got money in the bank, you're not worrying about paying the bills. Now it's about building that business of your dreams. It's about building that up to be what you want it to be, to creating that business that is everything you dreamed of, and getting to the 5th step in my 5 states of business ownership, which is the soaring state, which I'm going to talk about next time. Have a look at what you can do to increase your profitability, perhaps look at any wasted costs, look at the speed at which you're being paid. Can you do something on a debt collection basis if that's necessary from a cash flow perspective in terms of getting your invoices paid, and work towards growing the business, growing the team if necessary, putting systems and processes around that so that you can scale your business, because that's the next step and that's where the magic happens.